Trump Accounts for Kids Explained. Who gets the $1,000 and what parents must do. If you have a child, grandchild, niece, nephew, or baby in the family, there is a new account parents need to understand. It is called a Trump account. And for eligible children, the federal government may put in the first $1,000. But before you rush to open anything, there are a few important rules you need to know. Not every child qualifies. Not every family should add extra money right away. And this is not the same thing as a regular savings account, a 529 college plan, or a Roth IRA for kids. In this video, I'll explain what Trump accounts are, who qualifies for the $1,000, what parents need to do, and the mistakes families should avoid. This is plain English information, not political commentary, and not financial advice. Let's start with the basic question. What is a Trump account? A Trump account is a new child investment account connected to a federal pilot program. The account is in the child's name, but a parent or custodian controls it until the child turns 18. The big headline is the $1,000 pilot program contribution. According to the official Trump Accounts website, eligible children born between January 1st, 2025 and December 31st, 2028 can receive $1,000 from the federal government. That is why parents and grandparents are paying attention. But there are rules. The IRS says the child must be under age 18 before the end of the calendar year when the election is made and must have a valid Social Security number. For the $1,000 pilot program contribution, the child must also have been born between January 1st, 2025 and December 31st, 2028, and be a U.S. citizen with a valid Social Security number. So here is the plain English version. If the child was born in 2025, 2026, 2027, or 2028, there may be a path to the $1,000. If the child was born before 2025, the child may not qualify for that federal $1,000 pilot contribution. That does not mean there are no other ways to save or invest for that child. It just means the free $1,000 rule is tied to that birth date window. Now, how do parents actually get started? The IRS says parents can sign in to their IRS account and submit Form 4547. That is important because this is not just a random website form. You want to use the official IRS and official Trump accounts information, not a third-party link from a text message, social media post, or ad. Anytime a government benefit is in the news, scammers show up. So mistake number one is clicking the wrong link. Parents should go directly to IRS.gov or trumpaccounts.gov and verify the instructions there. Now let's talk about contributions. The official Trump accounts information says no contributions are required, but families may add money subject to annual limits. Treasury has said that parents, family members, employers, and other eligible contributors may contribute subject to annual limits. But this is where families need to slow down. Just because you can add money does not automatically mean you should put every extra dollar there. You may also have other goals: emergency savings, paying off high-interest debt, retirement savings, a 529 college plan, or a Roth IRA for a child with earned income. That is why I would think of the Trump account in 3 layers. Layer 1. Claim the $1,000 if your child qualifies. Layer 2. Understand the rules before adding your own money. Layer 3. Compare it against other family savings tools. Now, what happens when the child turns 18? The official site says the account is in the child's name and the parent is the custodian until the child turns 18. That matters. This is not just your account as the parent. It is designed for the child. So before adding extra money, parents and grandparents should understand control, timing, taxes, and how the money may be used later. Those details can affect whether this account is better or worse than a 529 plan, custodial brokerage account, or other savings option. Now let's cover the biggest mistakes. Mistake number 1. Assuming every child gets the $1,000. They do not. The key birth window is January 1st, 2025 through December 31st, 2028. Mistake number 2. Assuming this replaces a 529 college plan. It may not. A 529 plan is specifically designed for education savings, and depending on your state and family situation, it may still make sense. Mistake number 3. Putting in extra money before understanding the rules. The $1,000 seed contribution is one thing. Your own family money is another. Mistake number 4. Ignoring taxes. This is an investment account, not just a piggy bank. Parents should understand how taxes may work before making larger contributions. Mistake number 5. Falling for scam links. Use official IRS and Treasury sources. Do not trust random messages promising to claim your child's $1,000 through an unfamiliar website. Mistake number 6. Waiting too long to learn the process. Even if you are not ready to contribute extra money, parents of eligible children should at least understand what information they need and how the IRS election works. And mistake number 7. Grandparents giving money without talking to the parents. Grandparents may want to help, but the account is tied to the child and custodian. Family members should coordinate before making contributions. So what should parents do next? First, check the child's birth date. Second, confirm the child has a valid Social Security number. Third, use the official IRS or Trump Accounts website to review the current rules. Fourth, understand Form 4547 and the IRS account process. Fifth, decide whether you only want the $1,000 pilot contribution or whether you also want to add your own money. And sixth, compare the Trump account with other options like a 529 plan, Roth IRA for kids, or custodial investment account. The key point is this: the free $1,000 may be worth paying attention to, but the bigger decision is what your family does after that. A Trump account may become part of a child's long-term financial foundation, but parents should not confuse a new opportunity with a complete financial plan. In the next video, I'll walk through who qualifies for the $1,000 step by step, including the birth year rule, Social Security number rule, and what parents need before they start. If this helped, subscribe to the Wealth Peer for plain English money, retirement, Medicare, Social Security, tax, and family finance topics for people who want to avoid costly mistakes.